What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Man, it's been a crazy 72 hours. So, my two shifts were pretty rough and crazy. I literally went to bed after my shift. There's no way I had enough energy to post a video. And hopefully I'm not exposed to COVID or get COVID. So there was something that happened that shouldn't have happened on my unit. And I woke up this morning. Everything was ready to go. I was thinking about picking up a shift from 3 to 11 p.m. And I had my coffee ready. I was actually going to post a video and try to have it done by 11 p.m. and go work out and then just go into work. But I sneezed and I actually really had a terrible back spasm. I've never had a back spasm before in my life. I was literally on my stomach. I can't even breathe deep right now or else my spine hurts. The middle of my spine hurts. So I'm going to still muscle out this video. I'm really looking forward to posting this video for you guys. These real estate investment trusts are in demand. A lot of people love these stocks. These are some that you guys told me to post videos on. And I really like these guys. They have significant dividend increases. So if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these stocks out right now. And that first dividend stock or real estate investment trust is Essential Properties Realty Trust Incorporated. Symbol is EPRT. Dividend yield is 3.85%. PE ratio is 43.43. Volume is 759.68K. Market cap 3.28 billion US dollars. Year range was 1968 to 3292. Day range was 2679 to 2762. So these guys are actually doing very well against the S&P. They were beating them, and then all of a sudden the pandemic hit, and they're right in line with the S&P. So let's figure out what these guys are about. So Essential Properties acquires, owns, and manages primarily single-tenant properties leased to middle-market companies operating service-oriented and experience-based businesses. We invest in triple-net lease properties across the United States. Okay, what type of stuff? So their industry focus is restaurants, quick service, casual dining, and family dining, car washes, medical and dental, child care, and early childhood education, convenience stores, veterinary clinics, pet services, automotive services, health and fitness, movie theaters, entertainment values, and building materials. What they do is Essential Properties focuses on acquiring operationally essential single-tenant properties from proven operations of service-oriented and experiential-based businesses. Over the past 2 decades, our management team has helped businesses operators monetize their real estate to grow, acquire competitors to establish more profit centers, and reduce their real estate related expenses. By partnering with Essential Properties, we can help lower the cost of capital, increase your cash flow, significantly improve your return on investment equality, and maximize your company's market valuation. Lastly, we offer speed and certainty to close, as Essential can underwrite, analyze, and close a transaction in as little as 30 days. Ooh, that hurt my back actually, even reading that fast. So let's look at one more thing before we check their revenue. So here's just an example of my state of Ohio right here. 44 properties. Wyoming has 1. Texas has 83 properties. These guys are pretty big. Georgia, 87 properties. South Carolina, 16. North Carolina, 14. Virginia, 5. New York, 32. So they're pretty big, which make these guys very powerful. And I'll show you their revenue. Now look at this. 2016, this is in millions US dollars, 15.52, 54.49, 96.223, 139.357, 164.009. They're going up even during a pandemic. That's very impressive for these guys. So what else is impressive is their dividend history. Look at this. 2019, 22 cents, 2020, 23 cents, 2021, 24 cents, 2021, 26 cents, 24, 25, 26, with a dividend yield of 3.65%, PE ratio 43.56, annual dividend $1.04. That's a very attractive dividend stock. Let's jump to the next one that was very popular that you guys wanted me to do a video on. And that next real estate investment trust has a symbol GLPI. It's gaming and leisure properties. It's sitting at $46.13. A dividend yield of 5.81%. A PE ratio of 18.22. Market cap 11.00 billion US dollars. Its year range was 3908 to 5146. Day range is 4536 to 4651. So obviously, this is a entertainment and gaming and leisure stock. So you can tell it took a huge hit during the pandemic. And kudos to you if you got that when the dip was right there. A nice 5.81% dividend yield, which is also very attractive to these guys as a dividend stock. Let's check these guys out. Their portfolio consists of 50 geographically diversified gaming and related facilities, amenities, and well-positioned areas across the nation. Gaming and leisure properties is the nation's first real estate investment trust focused on acquiring real property assets leased to gaming operators. Our portfolio of 50 premier gaming assets is geographically diversified across 17 states. Our tenants include Penn National Gaming, Caesars Entertainment, Boyd Gaming Corporation, Casino Queen, and Bally's. Through innovation and proven management team that pioneered the gaming REIT space, we have leveraged the wealth industry and knowledge to deliver consistent year-over-year total shareholder return while enhancing their strength and stability of our diversified portfolio of premier gaming assets. They expect to grow their portfolio by pursuing opportunities that acquire additional gaming facilities to lease to gaming operators through triple net lease arrangements. We also anticipate diversifying our portfolio over time by acquiring properties outside of the gaming industry. The expertise and industry knowledge of our management team will allow us to secure additional avenues for growth beyond the gaming industry and allow us to pursue other acquisitions that may prove complementary to our existing assets. Okay, big talk, but what's their portfolio about? So here's their map. So they're pretty well, they're here in Vegas. There's the M Resort. Here's Hollywood Casino in Columbus. So here's just some of the locations that they have on their website. So, and then they're very transparent about what their facilities are about. So they know what they're doing. They're doing a hell of a job. And I have to show you their revenue real quick. So these guys, as a real estate investment trust, GLPI, the symbol, it is doing very well financially. Millions US dollars, 591. Look, a little bit of a hit, 575, 828, 971, 1055, 1,153 from 2019 to 2020. And guess what? The pandemic really didn't touch these guys that much revenue wise, which is very impressive. And look at these numbers just increasing over time. 828, 971. And that's very impressive. And they're very transparent. I didn't want to go too like in depth because they have a lot of properties, and a lot of these properties are in demand. And again, it's a diversification. This is a really good sin stock. And I have to show you their dividend history. Look at this. 2017, 62 cents, 63 cents, 68 cents, 70 cents, 60 cents. They took a little bit hit during the pandemic. They're almost back to 70 cents, 60, 65, 67. They have a 5.89% dividend yield, a PE ratio of 18.45, annual dividend of 268. So the big thing is, these guys is the entertainment property and entertainment real estate investment trust, gaming and leisure. They're almost back to where they were. So you can tell these guys are a powerhouse and a juggernaut when it comes to a sin stock and a well-diversified real estate investment trust. Let's jump to the next dividend stock. And here's the next dividend stock. It has a symbol APTS, that's Preferred Apartment Communities, sitting at $14.19 as a previous close. Currently, it's $14.39. Stay range was $13.96 to $14.46. Year range was $7.04 to $14.56. That makes sense why it's down because of the pandemic. You know, you can play the pandemic card. And the dividend yield's very attractive of 4.86%. So what are these guys about? Obviously, it's apartments, but how big are these guys? We need to know how big they are. They have a few things that they're well diversified on. So this is office. They're in retail. This is investment. Okay, this is vintage Hollywood West. The retail is very interesting. So these are just public centers, Kroger. These are some popular areas that they're at. Food Lion's pretty big in Carolinas. I remember at Myrtle Beach. I mean, my gosh, that Food Lion, everybody was over there. So they have Kroger. There's some facilities, Publix. That's another one. These are high in demand places. And here's some office spaces. These are pretty nice. They look pretty nice. Multifamily places, and obviously all properties. These are a combination of all of them. So they're well diversified, I think. I mean, office, retail, multifamily, and investment. So, they're just getting bigger. And I'll show you the revenue that they're generating. So here's 2014. This is in millions of US dollars: 56, 109, 200, 294, 397, 470, and 502. So these guys are increasing every year, which makes them very attractive. They appear very strong since the pandemic and very strong since the recession. So uh, these five high yield dividend stocks are very attractive. This one as well. So a lot of people are buying this one. I see on Twitter, man, people are loading up on APTS. And they have a reason. Look at this revenue and look at this dividend history real quick. And why wouldn't you load up? Look, 2014, 16 cents. Then it hit 17. 2015, it was at 18, 19, 20, 22, 23, 25, 26. Now, they took a little bit of a hit during the pandemic. Big deal, because you know what? They're going to rebound pretty strong. And again, this is not financial advice. It's for entertainment purposes only. In the disclaimer in the description, as I always say. But they're slowly, if you look at the trends before the pandemic, they've gone up. So it ain't going to be at 17 cents the whole time. These guys are down. People are capitalizing on the dip. And it's a 4.85% dividend yield. I can understand why people want me to post videos on these guys. They have a strong revenue, a strong backing, a strong portfolio, a little bit of a diversification. They're sitting at 14.39. How can you say no to that? That's why it's definitely on my radar. Let's jump to the next dividend stock. The next stock is National Retail Properties, NNN. It's sitting at 45.75. It has a dividend yield of 4.63%, PE ratio of 31.27. Market cap 8.03 billion US dollars. Year range is 38.25 to 50.33. Its day range is 45.50 to 46.16. So these guys were in line with the S&P and they took a little bit of a hit. So it makes sense why people are buying the dip in NNN. What are these guys about? Their portfolio is 98.6 occupied and they own 3,195 properties across 48 states, leased to more than 370 tenants and 37 lines of trade. So that's very popular as a real estate investment trust. These guys are strong. They have a strong portfolio. And I'm not going to go into detail, but they have 32 consecutive annual dividend increases. So this is very interesting too. So their return comparison, okay, so they compare themselves to the S&P. They compare themselves to narrate the Morgan Stanley REIT index. So the S&P, so they're showing the past 3 years, 5 years, 10 years, 15 years. They're very transparent. 25 years, look at this, 11.8% return compared to the other guys. So look at that. That's very interesting as a real estate investment trust, and I have to show you their revenue and their dividend increases. It is amazing. They're so popular. What a powerful dividend stock. And look at this increase, and look at these guys. They were touched a little bit by the pandemic, but not really. Look at this revenue. This is in millions US dollars. 434, 482, 533, 584, 622, 670, 660. You can play them pandemic. Not a big deal because these guys are so powerful. And guess what? Their dividends are awesome. Check this out. So here's 2013, 40 cents. 2014, 42 cents. 2015, 43.5. 2016, 45.5. 47, 50, 51, 52, 53 on 10/28/2021. So you have significant dividend increases. Dividend yield of 4.65%. PE ratio 31.12, annual dividend of $2.12. Let's jump to the final dividend stock. Okay, and that last dividend stock is Healthcare Trust of America. HTA is a symbol. It's right at $33.52. The dividend yield of 3.88% and a PE ratio of 67.90. Market cap is 7.40 billion US dollars. Its year range is 26.11 to 34.73. Its day range was 33.25 to 33.75. Why do I own these guys? I'll tell you why, and I'll explain to you why in a second. So they are the largest dedicated owner and operator of medical office buildings in the United States, comprising approximately 25.3 million square feet with $7.5 billion invested primarily in medical office buildings. HTI provides real estate infrastructure for the integrated delivery of healthcare services in highly desirable locations. Investments are targeted to build critical mass in 20 to 25 leading gateway markets and generally have leading university and medical institutions, which translate to superior demographics, high quality graduates, intellectual talent, and job growth. The strategic markets HTA invests to support a strong long-term demand for quality medical office space. Let me show you their investment portfolio. So right here, 471 medical office buildings, 25.6 million square feet of GLA in 32 states across the United States. That's pretty big as a real estate investment trust. Let me show you the revenue real quick. This is in millions US dollars: 371, 403, 460, 613, 696, 692 to 738. That is very impressive as a real estate investment trust. So HTA is a symbol. Look at this increase in revenue. I love it. Let's check out their dividend history. Lo and behold, we are rolling. 29 cents, 30 cents, 30.5, 31, 31.5, 32, and 32.5%. 3.87% dividend yield, a PE ratio of 67.04, annual dividend of 130, sitting at 33.52. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I may go live 8:30 tonight. I'm thinking about doing that. I'm highly thinking about doing that at 8:30 p.m. Eastern time. Hopefully my back will be fine. I'll still do it anyways. You know what? I'm going to do it. So make sure you watch this video, and at the end, we'll go live and we'll discuss some dividend stocks at 8:30 tonight. We'll do it till maybe from 8:30 to 10:30. So stay on top. Let me know what you think of these dividend stocks, and I'm gonna definitely take a NSAID after this. I'm hurting just when I turn, like literally in the center of my back. I can't even take a deep breath. So you guys take care and have a good